Hello, and thank you for listening to the 160th episode of the commercial-free and always will be Congressional Dish. I'm your host, Jennifer Briney. Today's episode is about credit reports and the big three companies that create them. Now, most of us don't think too much about our credit reports, which are the things that get run when you want to open a bank account or get a new credit card or get a new insurance policy, rent an apartment, or even get a job. For the vast majority of my life, even though I knew credit reports were a thing, I never asked where credit reports come from. You know, who creates them? What's on them? I never asked those kinds of questions. The first time I gave my credit report any thought at all was about a year ago when a new mattress store credit card in my name showed up in my mailbox, even though I didn't apply for that card and I didn't need a mattress. For the first time in my life, I needed to see my credit report. I needed to know if someone was opening up a bunch of accounts in my name. For the first time in my life, I had a reason to become familiar with the name Equifax. Equifax is one of the three companies in the United States that generates credit reports. The other two are Experian and TransUnion. And through the experience of getting my identity stolen, I became very familiar with these three companies, or at least I thought I did. But it wasn't until about 2 months ago, at the beginning of September, that I started questioning their bigger picture role in our society. And that's because that's when we found out that Equifax was hacked and very important information, including social security numbers, for about 145.5 million Americans was stolen. 145.5 million Americans. That's well over half of all American adults. And so here's exactly what went down with the Equifax breach as described by the Federal Trade Commission. Quote, the breach lasted from mid-May through July. The hackers accessed people's names, social security numbers, birth dates, addresses, and in some instances, driver's license numbers. They also stole credit card numbers for about 209,000 people and dispute documents with personally identifying information for about 182,000 people. And they grabbed personal information of people in the UK and Canada too, unquote. Now, after this colossal fuck-up, the CEO of Equifax, who was Richard Smith, he resigned, but he was still hauled before Congress and grilled by senators and representatives in 3 different hearings. I watched every minute of those hearings, and you'll get all the highlights today. But this story is bigger than Equifax. What was exposed to me and soon to you in researching this breach is that credit reports are a shady business and have been since the beginning. The entire industry is based on violating our privacy without our express consent. In every way, the credit reporting business makes money by selling us. And when we want to protect ourselves from their recklessness, the only companies we can turn to and pay are them. But I'm getting way ahead of myself here, so let's start from the beginning. What is credit reporting? When did credit reporting start? And how did we get to the place where the most important information about the vast majority of American adults was able to be stolen from a company that so many of us had never heard of? Credit reporting started about 200 years ago when small businesses banded together to trade financial information about their customers. Now think of this in terms of the pre-computer days. You're living in any town in America and you own a business on the main street. As the years go by, you get to know your customers and your neighbors, who are the other business owners. As fellow business owners, you get together, you have lunches, and in those lunches, you chat about common customers. And for example, word gets out to all of the business owners in the town that you probably shouldn't let Frank Gallagher buy now and pay later because he never pays. Now that information is useful to other business owners because they can learn from your experiences with that person. They don't have to go and make the same mistake that you did to learn that Frank is not trustworthy. And that benefit doesn't stop at the town's edge. Businesses from the next town over have meetings too, and they want to know if they can trust Frank. And so they would contact the businesses in your town who tell them that Frank is a drunk who never pays his bills. You know, it all started as a business rumor mill. And these business associations eventually got more organized and made this sharing process more formal, which morphed their meetings into small credit bureaus. Then in the 1830s, the Depression was caused by banks recklessly loaning out too much money. Sound familiar? And in the aftermath, credit reporting went national. A guy named Lewis Tappan started the Mercantile Agency, which collected rumors from businesses around the country and sold the reports out of New York City to anyone willing to pay. The rumors they were selling, though, were super subjective. For example, one of their reports cautioned that, quote, prudence in large transactions with all Jews should be used, unquote. And so they were collecting and selling information, whatever information they had, regardless of its appropriateness or its accuracy. And the subjective nature of the information offered by the Mercantile Agency caused the businesses using the reports to ask for a simpler system. And so in 1864, the mercantile agency started using numbers to rate people, inventing the numbers based on the collections of rumors that they had. And with that, the first form of our credit reports were born. Fast forward 100 years, and by the 1960s, this information sharing had started to create a backlash, as customers realized that the information the businesses were sharing was being used to deny people services and opportunities, and people got pissed that they weren't allowed to see what information the businesses were passing around in their files. After a bunch of congressional investigations, it turned out that the files contained only negative financial information, none of the good stuff like bills paid on time, but also one big company in particular was including other information about lifestyles, gathered from newspapers and other sources that included things like sexual preferences, drinking habits, and even reputations for cleanliness, which would really fuck over this particular podcaster who frequents dive bars and needs to be told by her husband to shower.
Oh, that's nasty.
In addition to collecting that lifestyle information, this company, the retail credit company, was also in the process of making their information digital, which scared people because it could potentially take silly local rumors and spread them nationwide. And so by 1971, enough of us were pissed about our secret reputations being passed around the business world that our lawmakers in Congress interfered in the private marketplace and passed the Fair Credit Reporting Act. This law legitimized the credit reporting business, it's true. But it also, for the first time, gave us some rights and placed some rules upon the business of credit reporting. And so first, we gained the right to know some of what's in our credit files. We also gained the right to be told if our information on our credit report is the reason that we're denied something, like a line of credit, insurance, or a job. And we also gained the right to dispute wrong information on our credit reports. This law also placed some rules on the credit reporting businesses, such as they would have to correct or delete wrong information. They would also have to delete negative financial information that's more than 7 years old or for 10 years for bankruptcies. And they would be prohibited from giving our credit reports to just anybody who would pay them. They would be limited to providing our financial histories only to businesses with valid needs for them, like banks, landlords, and insurance companies. And then last, this law also gave victims of identity theft additional rights to access their credit reports. But I just want to highlight here that those are rights that were granted by Congress, our representatives in this government with the enormous power to make the rules that we live by and the rules that businesses must obey. This shows that Congress is capable of making laws that benefit us. But anyway, after Congress gave us some legal rights in the credit reporting game and the new law went into effect, the business world's gossip girl, the retail credit company, changed their name, which was a brilliant business move. Because this is a move that we've seen work for hundreds of years, even recently. For example, remember Blackwater? In case you don't remember that company or the details of what it did, that was the private war contractor company that hires veterans to go back to war, pays them way more than the military does, and everybody makes a profit. Well, the W. Bush administration rigged the new Iraqi laws to make private contractors like Blackwater immune from Iraqi laws. And so what did Blackwater do with their market freedom? Oh, they just gunned down 14 innocent people in an Iraqi intersection. These are also the guys who played Rambo on the streets of New Orleans after Katrina. And so even though you don't hear about Blackwater much, that company still exists. Blackwater changed their name to Z in 2009, the first year of the Obama administration, and it's now Academi. The founder is the same dude, Eric Prince, also known as Betsy DeVos's brother, and with the name Blackwater no longer following him around and reminding us what kind of shady war profiteering piece of shit he is, the Academi CEO, Eric Prince, has been writing op-eds and doing the TV tour and openly pushing for the Trump administration to privatize the Afghanistan war. Same company, same asshole, different name. Almost no one is aware. True accountability doesn't seem to exist for powerful companies that change their name. And so that's what Retail Credit Company decided to do. In 1975, after being rightfully demonized by the public for spreading inaccurate rumors about Americans nationwide, they changed their name to Equifax. Since then, 2 other companies have joined Equifax to become the big 3 companies in the credit reporting business. TransUnion started as part of the railroad business, but it eventually bought a credit reporting business, which it then expanded. And honestly, in my experience as a victim of identity theft and in my research for this episode, TransUnion is the company that I know the least about. However, I did discover that until recently, TransUnion was partially owned by Goldman Sachs, the vampire squid, until it was offered up for gambling on the stock market in summer of 2015. That was only 2 years ago, which smells like a rabbit hole for another day. And then finally, there's Experian, which is the last of the big three to join the party. Experian became a thing in 1996, and it's basically the global version of the credit reporting racket. It's based in tax haven Ireland and operates in 37 countries around the world. And so in the 1970s, the Fair Credit Reporting Act gave us the ability to see inside the files held by the big three. So now we can see what records they have about like our bank accounts or our credit cards. Like when I look at mine, I can see my old credit card and my Southwest credit card, which is an amazing credit card to have, by the way. And I do accept drink tickets and Southwest points. But the point is that when I look at my credit report, I can see what accounts I've opened in banks and department stores, and I can see when my credit report was last pulled and what company pulled it. Now, that's the stuff on the credit report, but the credit score is a number. And so here's Stan Olei. He's a senior vice president at Experian, answering the question, what is a credit score, during a House Financial Services Subcommittee on Oversight and Investigations hearing that was held in July of 2008.
A credit score is a numerical expression of risk of default based on a credit report. The score is produced by a mathematical formula created from a statistical analysis of a large representative sample of credit reports. The formula is typically called a model. The credit score is calculated by the model using only information in a credit report. These reports include the following types of information: credit account history, such as was the account paid, was it paid on time, how long has the account been open, and what's the outstanding balance. The type of account, is it a mortgage, is it installment, is it revolving? The public record information, liens, judgments, bankruptcies, for example. Inquiries in the credit file that represent applications for new credit and other consumer-initiated transactions. A credit report does not include information such as income or assets. It also does not include demographic information such as race or ethnicity. Demographic factors are not used in the calculation of a credit score.
So basically, a credit score is a number that's supposed to judge for banks and other businesses how much of a risk you are. And as far as credit scores go, the most important one, the one you're probably familiar with, is your Fico Score. The Fico Score was developed in 1989 as a joint project by Equifax and a company based in Minneapolis called the Fair Isaac Corporation, which provides financial services to the world's 10 largest banks as well as companies all over the planet. The purpose of the Fico Score is to create one number that is assigned to each individual to help companies judge our trustworthiness. How likely are we to pay our money back? Get mathy with it and assign us all peasants a number. That's the Fico Score. And so our Fico Score is a big deal on our credit report. But how is that number calculated? Well, here's the explanation to Congress given by Thomas Quinn, a vice president from Fair Isaac Business Consulting, the company that invented the Fico Score with Equifax. This was in the hearing about credit scores that took place in the summer of 2008.
A FICO score is a three-digit number ranging from 300 to 850, where the higher the score, the lower the risk. Lenders use the score, along with other information, to decision the request for credit, set the credit line, and pricing terms. Creating the FICO score model requires two samples of credit reports 2 years apart for the same randomly selected depersonalized set of consumers provided by one of the national credit reporting agencies. Those credit factors found to be most powerful and consistent in predicting credit performance, individually and in combination, form the basis for the complex mathematical algorithm which becomes the score. The traditional FICO score model evaluates 5 broad types of data elements from the consumer credit report. These include, and listed in order of importance, previous credit payment history, about 35% contribution, level of outstanding debts, about 30% contribution, length of credit history, 15% contribution, pursuit of new credit, 10% contribution, and mix of type of credit, about 10% contribution. FICO scores were first introduced to the marketplace in 1989 and have been consistently redeveloped and updated throughout the years to ensure their predictive strength.
Redeveloped and updated are corporate words for changed, which means that the recipe for FICO scores he just gave might have changed since these questions were asked. We don't really know, since Congress hasn't asked anything else about it since the end of the W. Bush years. But this is how the score is calculated?
Creating the FICO score model requires 2 samples of credit reports 2 years apart for the same randomly selected depersonalized set of consumers provided by one of the national credit reporting agencies. Those credit factors found to be most powerful and consistent in predicting credit performance, individually and in combination, form the basis for the complex mathematical algorithm which becomes the score.
I think we can all agree that we have to put the answer to how is the FICO score calculated in the unclear category, because
that don't make no sense.
So how that score is calculated is clearly a mystery to anyone outside of the credit reporting industry. But how that mysteriously calculated score affects us is not a mystery at all. Now, by the end of this episode, you will be inspired to check your credit report, and I'm going to help you do it. So put this information in your brain bank. You'll like having it later. But basically, the best credit rates are given to people with FICO scores above 770, but anything over 700 is good. Mortgages and car loans are relatively easy to get, and interest rates should be affordable. Now, credit cards are generally available to people that have a 660 or above, although below 700, you can expect higher interest rates. But then any credit rating under 600 is basically and you can expect high interest rates for any loans if you can get loans at all. At below a 600, you will probably be charged more for car insurance, and you may also have trouble finding a job as companies check employees' credit now. Now, I should mention that there is a law in the books that says that you have to give your possible employer permission to check your credit. But when you're nervously filling out a job application, are you reading all the fine print and challenging that fine print? Or are you just checking off the boxes and signing your name? But the way that this system works, it's a system that fundamentally benefits the wealthy. Higher credit scores belong to people without true debt. If you can pay your bills, you pay less for the same thing. You pay less for a mortgage, an insurance policy, a credit card, and it's easier for you to get a job. But they require people who have the hardest time paying back bills to pay back a lot more in total. The less money you have, the more expensive financial products become, and that can be used against you for your ability to make money by getting a job. Credit scores, combined with the freedom for banks to charge different people different rates for the same products, has created a system that charges people more for being poor and also makes it harder for them to get the jobs that allow them to pull themselves up by their bootstraps. And really, this is one of the biggest epiphanies that I've had in researching this, which may seem pretty basic to people that know things, but it really never occurred to me before now that the use of credit scores to judge people are a big player in the debt slavery that so many Americans struggle to be free from. You know, the market is free to charge people different prices for the same thing, and they're using secretly calculated credit scores to decide who gets to pay more. Because, for example, the vast majority of homeowners out there, especially in my generation, actually live in bank-owned buildings that they are renting to own after a 30-year contract. You know, you don't own your home if you have a mortgage. Mortgages are debt. You don't own shit until the entire debt is paid off. And that same home is going to cost someone with a lower credit score a whole lot more in the end than it would cost a wealthy person with a good credit score. Because that number, determined by the complex mathematical algorithm, is what the bank uses to determine the interest rate. Same with new cars. You know, if you have a monthly payment, that is not your car. The banks own that car and they can take that car away from you until the monthly bill is zero. But at the end of paying that car off, the person with the low credit score will pay more for the same car than someone with a high credit score. By ever being in debt, you sign yourself up for more debt. And really, our entire economic system is based on debt. And these credit reporting agencies are at the center of that system. And I'm still working on wrapping my mind around this because, like I said, I've never really sat down and thought about this much. But credit reports, and therefore Equifax, Experian, and TransUnion, determine how much each of us will pay for our most expensive purchases. They directly affect our bank accounts. They directly affect our ability to live comfortably. But the very existence of these FICO scores on the credit reports and how they're generated has always been kind of a scandal. And some current members of Congress have been aware of this for a while. This is South San Francisco's Representative Jackie Speer during her first year in Congress, 2008.
We call these credit reporting agencies or credit bureaus, which gives the average consumer the impression that they are dealing with some federal entity, when in fact they are not. We heard this afternoon they're private or publicly traded companies. And yet, this information is so critical, and to Mr. Barrett's comments, who suggested that the consumer needs to be educated, needs to know what goes into their FICO score and what they can do to improve their FICO score, we can't give those kinds of answers because, for all intents and purposes, it is a proprietary formula. It's sort of like secret sauce. We don't know what it is. Now, there's something wrong when the government can't articulate what should be considered in a FICO score.
You know, FICO scores, considering that they affect the bank accounts of every single American, do seem like something that people hired with votes instead of people hired by private executives on private boards and their private shareholders. You know, people we vote for should be creating the formula for FICO scores. It seems, at least to me, like rules for something that affects every single one of us financially should be like a societal level, not corporate level decision. Because as the system is now, Congress, our nation's rulemakers, don't even know all the rules that the private sector made up to govern FICO scores. In fact, while we're all generally aware of the existence of our FICO scores now, that was not the case until relatively recently. The clip I'm going to play for you is Evan Hendricks. He is the editor of Privacy Times, and this was something that he told Congress in that July 2008 House Financial Services Subcommittee hearing.
Right now, you take it for granted that we know about credit scores, but you have to remember it was like 12 years ago in the mid-1990s when credit scores started being widely used. They were a complete secret. The industry did not even acknowledge their existence.
So credit scores began in secrecy and are still determined with secret formulas, which begs the question, if so much of this process is allowed to be secret, who is policing these credit reporting companies to make sure they're calculating credit scores fairly? Well, here's Stan Olei again, the vice president of Experian in that 2008 hearing. And for corporate speak translation assistance, when you hear the word lender, think bank. And when you hear the word regulator, think law enforcement. And when you hear the word proprietary, think secret.
Regulatory oversight of credit scores is accomplished through routine bank examinations for compliance with a number of laws that govern fair lending, such as the Equal Credit Opportunity Act. This makes sense because the lender chooses the scoring model to assist in this proprietary underwriting process. The lender is ultimately responsible for demonstrating to regulators that the scoring model it has chosen complies with the lending laws.
Rewind that if you need to, because it's worth understanding. But he essentially said that the financial industry is policing the calculations of our credit scores. Law enforcement's role is to trust the banks to make sure they're calculated fairly. The market is being given the freedom to police itself. The banks are the FICO score police. Banks like Wells Fargo, which added unneeded and unauthorized car insurance to the accounts of people who took car loans from them, which caused 274,000 of their customers to go into delinquency, which lowered all their credit scores, which in turn allows the banks to charge all of those people more in interest. The banks, which profit from their customers' low credit scores, are the ones policing credit scores.
Well, that's just fucking great! Oh, great! You know what that is? Do you know what that is?
Great.
That's just fucking great!
And so, back to the history of credit reporting. Because we still didn't know exactly what was on our credit reports, and we couldn't see for ourselves the factors making up our credit scores, Congress got involved in the affairs of the private sector to our benefit once again. In 2003, Congress passed and George W. Bush signed into law the Fair and Accurate Credit Transactions Act. This new law required the three private national credit reporting companies, Equifax, Experian, and TransUnion, to provide each of us a copy of our credit report for free once per year if we request it. It also created a website where we can go to request all of these credit report copies. It's called annualcreditreport.com. It is not
Free, that spells free, creditreport.com, baby. Saw their ads on my TV, thought about going but was too lazy. Now instead of looking fly and rolling fat, my legs are sticking to the vinyl and my posse's getting laughed at. Free, that spells free, creditreport.com, baby. Offer applies with enrollment and triple advantage.
That was Experian, which tricked a lot of us into not using the proper website for our actual free credit reports after the law was signed. You see, instead of using annualcreditreport.com to get the actually free credit reports, people guided by these catchy little jingles, well, many people went to freecreditreport.com instead and found out that we could see our Experian credit report and only our Experian credit report, not the other two, for free as long as we signed up for an Experian membership. If we didn't realize what we were signing up for and failed to call their call center, because you couldn't do it online, had to call. So if you failed to call them and cancel within 7 days, you were charged $15 per month for Experian's credit monitoring service. Now, after they got sued for this in 2005 and paid almost $1 million in fines to the Federal Trade Commission, Experian started adding their little disclaimer that you heard at the end there, but people continued to get tricked, which led to Congress passing the Credit Card Act of 2009. Part of that law forced any company offering a free credit report to add, quote, "This is not the free credit report provided for by federal law," unquote, which didn't really fit into their jingle very well. And the last commercial that they aired was in 2012. So moral of the story, to check your credit report for free from all three of the credit reporting businesses, go to annualcreditreport.com. And I do have a link for you in this episode's show notes. And because of Equifax, I suggest you use that website and do it soon. Because Equifax and their amazingly low-tech cybersecurity protocols fucked over all of us and exposed the financial information and social security numbers of the majority of American adults to we have no fucking idea who. But here's where it gets even worse, because we know that they have and lost our financial information. We know that they have and lost all the stuff that you can see listed on your credit report, because we're allowed to see those reports now. But what we still don't know is all of the other information that they have on us that they're selling to companies to use for advertising purposes. These credit reporting companies are still very much in the gossip girl business and dishing out info about our personal lives. And they're not hiding it. In fact, right now, they're advertising it. For example, Experian has a program that they're advertising to banks right now on their website called Choice Score. On the Experian website, it's being described this way, quote, "Using the most comprehensive array of non-credit data available from Experian, including consumer demographic, behavioral, and geodemographic information, Choice Score's custom models offer users the ability to identify underbanked consumers," unquote. So let's break this down. Quote, "Using the most comprehensive array of non-credit data," unquote. Sounds to me like they have data that has nothing to do with our credit reports. This non-credit data includes, quote, "consumer demographic," unquote, data, which is age, gender, marital status, race, income, all personal information that's not on our credit reports. They also advertise that they have, quote, "behavioral," unquote, data, which, what the I don't even know what that means. Are they reporting on my cleanliness again? Could we be back in the "I hear Frank Gallagher's a drunk" territory? You know, did that ever stop? And Experian is offering, quote, "geodemographic information," unquote, like where we physically are. And how the fuck are they getting that information? Do they have contracts with my cell phone company? Do they have spies hiding in my plants? Who the hell is feeding them location and behavioral information about us? Because if they're advertising to banks that they can give it to them for a fee, clearly they must have it because they're selling it. And this particular Experian program teaches the banks how to manipulate a specific group of people into opening bank accounts and taking out loans. And this is directly from their website. It says, quote, "Choice Score helps marketers identify and more effectively market to underbanked consumers, including, but not limited to, new legal immigrants, recent graduates, widows, those with a generation bias against the use of credit, followers of religions that historically have discouraged credit, and consumers with transitory lifestyles such as military personnel," unquote. The list of people Experian is offering to help the banks manipulate into opening bank accounts are vulnerable people, immigrants, widows, dumb college kids, and fiscally conservative people, people who understand that credit is debt and who wisely avoid it. And a retired congressman from an invincibly elite family, you might recognize the name of Senator J. Rockefeller. Well, he noticed Choice Score back in 2013 and asked Tony Hadley, the guy who was then the senior vice president of government affairs, lobbying, and public policy at Experian, about this Experian program.
So, Mr. Hadley, what does your company, or why does it, single out and sell lists of economically vulnerable groups like immigrants, widows, and military personnel?
Thank you, Senator. We would be very concerned if lenders were using that information for scamming purposes too. And we have processes and procedures in place to ensure that nobody gains access to that score for that purpose.
And how does that work?
We have a onboarding system by which we take on a client that gets our information to know who they are. And we also have a mail piece review process to know what they're going to offer the consumer. And if it's anything that looks discriminatory or predatory, we will not provide our list to them. Now,
and this is your self-regulation.
This is our self-regulation under DMA standards. So if we were to violate that, we'd be in violation of our self-regulatory standards as well as our contractual standards with our clients. Now, what's important here is that there are somewhere between 45 and 50 million Americans who are outside the mainstream of the credit markets in the United States. These are underbanked, underserved consumers who financial institutions cannot reach through credit scoring and credit report. They don't have financial identities or a big enough or even the presence of a credit file in order to bring them into the mainstream of financial markets. But that doesn't mean that they don't need access to financial services. So banks use this data to try to reach out to consumers who they can help to empower them, not to scam them. We don't want to do business with financial institutions who are trying to scam people, only to empower them.
Yeah, debt is empowerment. War is peace. Freedom is slavery. Ignorance is strength.
And this is their best way to find those individuals who are outside the mainstream, immigrants, new to credit, like recent college graduates, exactly what we're talking about here, to give them an offer, an invitation to apply, so that then they can make an eligibility determination regarding that application under the Fair Credit Reporting Act. But this is marketing literature, not eligibility determination. Can I add to that for you?
Not entirely. Can you tell me which are the companies that buy this choice score product from you? They
would be banks and financial institutions and members of the financial community.
That's what's called a general answer.
Yeah. I can't tell you who our clients are. That's a proprietary list of ours. It's like our secret ingredient. The ones who would want that most are our competitors. And our counsel has informed me that they don't believe that our ability to give that to you can be shielded from disclosure to the rules of the Senate. If we thought they could be, for example, under a law enforcement action where it could be shielded and protected from FOIA or other disclosures, we could do that, but not under the situation under the rules of the Senate. And we're very sorry about that, but we just simply can't do that. Our counsel won't let us.
So Experian is selling our information, and they won't tell us, any of us, even a Rockefeller, who they're selling it to. And it's not just Experian. In the hearing that took place in the Senate on October 4th of this year, 2017, Senator Jeff Flake of Arizona tried to get Equifax's former CEO, Richard Smith, to tell us who their customers are. And this is the closest that we're going to get to an answer, but spoiler alert, the customers they care most about are not us.
In your testimony before the House yesterday, you stated that Equifax's, quote, traditional business model is with companies, not with 400 million consumers. What portion of Equifax's business is, consumer-facing?
Mr. Chairman, roughly 10% of our revenues around the world come from what we call B2C, business to consumer.
That's 10%. Then what is the main source of Equifax's revenue stream?
The vast majority of the remaining is largely doing analytics, insights, and providing solutions to banks, telecommunications companies, credit card issuers, insurance companies of the like around the world.
So if only 10% of the revenue is consumer-facing, what is the company's incentive for keeping consumer data secure when it has no meaningful interaction or limited meaningful interaction with the accountability of consumers?
We are clearly viewed as a trusted steward of that information, and Losing that information violates the trust and confidence not only of the consumer, but also the companies we do business with as well.
So other big businesses are the customers they really care about, not us. And so Equifax and Experian, and I assume TransUnion, they're selling information to the big businesses about us. But where are they getting all this information? How did Equifax get this information about most of us, considering so few people have even heard of their company? Well, here's Representative Larry Bouchon, I don't know how to say his name, but he's from Indiana. Here's Representative Larry from Indiana asking former Equifax CEO Richard Smith that very question on October 3rd.
Is it possible people who never signed up or used Equifax directly could have been impacted by the breach?
Yes, Congressman.
Okay. So how does Equifax get the information on people who've never directly associated with Equifax at all? I mean, I'm not familiar with that.
Yeah, we get it from banks, telecommunications companies, credit card issuers, so on and so forth.
So just like, we go to apply for a loan, they send you the information because they want to get they want to get the information on my credit rating, for example.
Correct. As I define it, we are part of a federally regulated ecosystem that enables banks to loan money to consumers.
Right. So it's up to the banks at that point to notify the individual which credit agencies they're utilizing to assess their credit risk? Or is it up to the credit
Traditionally, the contributors of the data, in that case, Congressman, the banks would give their data to all three. That's the benefit of the system, is you get a holistic view of an individual's credit risk.
Yeah, my point is, I guess, because a lot of people I talk to back in Indiana, southern Indiana, have no idea who Equifax is, right? And many of those people have applied for home loans and other things. And matter of fact, probably at some point you have their information, but they may or may not have been notified who sent the information to them, probably the bank or other agency. And that's just, that's something I think that is also maybe an issue, that people don't understand or have not been told who is being used to assess their credit risk, and hence something like this happens, they have no idea whether or not their information has been compromised.
I understand your point.
Yeah.
So the information they sell is fed to them by banks and insurance companies and telecoms. I think we just figured out how they're getting our location information. Those big companies are feeding the credit reporting companies our information, and then these credit reporting companies are organizing the data and selling it right back. It's all a big corporate circle jerk.
Welcome to the circle jerk. Grab the penis next to yours. Make your bro go, oh, oh, oh. Tell them all the things we know. Welcome to the circle.
And the credit reporting companies don't think they have enough on us because they've been pushing for years to get even more information about us than they already have. This is Chet Wermansky, the Vice President of Credit Services Analytical Systems at TransUnion in 2008, testifying to the House Financial Services Subcommittee on Oversight and Investigations.
There is strong evidence to suggest that consumers would benefit from the increased reporting of non-traditional credit information. For example, consumers with thin credit files, and in particular, minorities, immigrants, young and old, all experience a net benefit from full file reporting by energy companies and telecommunication providers. Consumers with impaired credit histories also obtain a net benefit from full file reporting by these companies. We are presently engaged in a follow-up study to learn more about the impediments to full file reporting faced by the utilities and telecommunication industry. It may be very well that Congress may have a role to play in removing roadblocks to encourage voluntary full file reporting.
And these companies, worth tens of billions of dollars, spend a lot of money lobbying Congress to get those roadblocks removed, along with other requests. Last year alone, the big three together spent about $2.5 million to influence our Congress. And here's an idea of what they've been lobbying for lately. Here's Senator Patrick Leahy of Vermont questioning former Equifax CEO Richard Smith on October 4th.
You spend a lot of money lobbying against a Consumer Protection Act that might require you to notify consumers immediately of such breaches. Are you still going to fight and still spend hundreds of thousands of dollars to stop that kind of a consumer protection bill from going through?
Senator, I can tell you as a company, we do have a government relations team. In In the scheme of things, it's relatively small. We're a company with expenses of well over $2 billion. I think our entire lobbying budget, which includes association fees, is $1 million or less.
I could care less what your budget is for lobbying. The fact is you oppose legislation that might require notifying consumers, might actually give consumers the ability to respond when they've been hurt. Is Equifax going to continue to fight consumers' right to know?
One, I'm unaware of that particular lobbying effort you're referring to. I can talk to the company, but I'm unaware of that particular lobbying effort.
It was in your report that you have to file on your lobbying expenses.
So $1 million to influence Congress? Pfft. Richard Smith wipes his ass with $1 million. Who doesn't have that kind of money? Oh yeah, damn near all of us. Also, it's worth knowing that 12 out of their 18 lobbyists that receive that $1 million are so-called revolvers, as in revolving door. This means that these people worked in Congress at some point and are now being paid to influence their old coworker friends on behalf of Equifax. In fact, one of their lobbyists was a lawyer for this exact committee, the Senate Judiciary Committee from 2003 to 2006 when the Republicans had control during the W. Bush years. And 3 more of their lobbyists worked for current Republican members of Congress. One worked for Senate Majority Leader Mitch McConnell. That's a powerful friend to have. One also worked for Representative Steve Chabot of Ohio, and another worked for Representative Mike Rogers of Alabama. But who doesn't have former staff members of Congress working for them to influence their former bosses? Oh yeah, damn near all of us. All of us who are not valued customers, but are instead the products sold by the credit reporting companies. And here's exactly how they make money doing it. This was Representative Gene Green of Texas questioning ex-CEO of Equifax, Richard Smith, on October 3rd.
Mr. Smith, Equifax customers are businesses who purchase data and credit reports on consumers. The American public is essentially Equifax's product. How many times per year, on average, does Equifax sell access to a given individual's credit file to a potential creditor, and how much do they make every time they sell it?
If I understand the question, Congressman, we take the data that is given to us by the credit ecosystem of the U.S., add analytics to it, and then when a consumer wants credit, again, through a credit card, a home loan, a car, the bank then comes to us for that data, for that analytics, and we charge them for that.
Okay. Well, the question was how many times does Equifax receive payment for that individual credit file? Every time. If my local car dealer contacts Equifax, and so they pay a fee to Equifax for that information.
Yes, Congressman. If you as an individual want to go to that car dealership and get a loan for a car, they come to us or our 2 competitors, and when they take your data, access your data, we do get paid for it, correct?
So big picture, that's what's going on. That's what the companies that create our credit reports do. And so now let's get to the breach. And to give us a nice, tidy summary of what happened, here's Representative Jan Schakowsky of Illinois. And this is in the hearing that took place on October 3rd in the House Energy and Commerce Subcommittee on Digital Commerce and Consumer Protection.
The Equifax data breach was massive in scale. 145.5 million American victims as of yesterday. I would call it shocking, but is it really? We have these underregulated, private, for-profit credit reporting agencies collecting detailed personal and financial information about American consumers. It's a treasure trove for hackers. Consumers don't have a choice over what information Equifax or, for example, TransUnion or Experian have collected, stored, and sold. If you want to participate in today's modern economy, if you want to get a credit card, rent an apartment, or even get a job often, then a credit reporting agency may hold the key. Because consumers don't have a choice, we can't trust credit reporting agencies to self-regulate. It's not like when you get sick at a restaurant and decide not to go there anymore. Equifax collects your data whether you want to have it collected or not. If it has incorrect information about you, it's really an arduous process. I've tried it to get it corrected. When it comes to information security, you are at the mercy of whatever Equifax decides is right, and once your information is compromised, the damage is ongoing. Given vast quantities of information and lack of accountability, a major breach at Equifax, I would say, would be predictable, if not inevitable. I should really say breaches. This is the third major breach Equifax has had in the past 2 years. From media reports and the subcommittee's meeting with Equifax officials after the breach, it's clear to me that the company lacked appropriate policies and practices around data security. This particular breach occurred when hackers exploited a known vulnerability that was not yet patched. It was months later, before Equifax first discovered the breach, and it was another several weeks before Equifax shared news with the consumers, this committee, the Federal Trade Commission, and the Consumer Financial Protection Bureau.
And here's Equifax's former CEO, Richard Smith, in his opening statement, giving a brief summary of how this happened.
We know now that this criminal attack was made possible because a combination of human error and technological error. The human error involved the failure to apply a software patch to our dispute portal in March of 2017. The technological error involved a scanner which failed to detect that vulnerability on that particular portal. Both errors have since been addressed. On July 29th and July 30th, suspicious activity was detected and the team followed our security incident protocol. The team immediately shut down the portal and began our internal security investigation. On August 2nd, we hired top cybersecurity forensic and legal experts. And at that time, we notified the FBI. At that time, to be clear, we did not know the nature or the scope of the incident. It was not until late August that we concluded that we had experienced a major breach.
Now, in these hearings, he went into much greater detail about what happened. But honestly, I don't give a shit. What matters is that their cybersecurity was so shoddy that even after they were warned about a vulnerability, they didn't fix it, and this happened. What we need to understand now is what can be done with the information that the hackers have. And so here's Senator Chuck Grassley of Iowa summarizing what they did to us.
The information hackers obtained or gained access to in the Equifax breach is the most sensitive personal information used by thieves to commit identity theft. So we should let that sink in very definitely. A credit card number or a bank account information can be changed with a phone call, but you can't change your social security number and your date of birth. Anyone who's ever applied for a loan, a credit card, a job, or open a bank account knows you have to provide a social security number, date of birth to verify your identity. Thus, if someone has this information, they can do the same and take over your identity. They can become you, and you won't know it happened until it's too late.
So that's the risks that Equifax exposed the vast majority of American adults to. But what about all the other stuff? The demographic, behavioral, geographic, and whatever other kind of information they've collected from God only knows who. Do we now get to know what else they have now that we know for sure that their cybersecurity system is as solid as Swiss cheese? Well, here's Senator Mazie Hirono of Hawaii questioning ex-CEO Richard Smith. And just to make this easier from here on forward, all of these hearings took place on October 3rd and 4th in the House and the Senate. And I have the transcripts of all of these clips for you in the show notes. So I'm just going to stop telling you which hearing it is. And if you really want to find these, I made it super easy for you in the show notes.
Do consumers have the right to find out what kind of information data brokers like Equifax has on them?
Do they have the right?
Yes. Can they call Equifax up and say, what do you have on me?
Every consumer has the right to a free credit report from us, from the industry, and that credit report would detail all the information that the credit file would have on them.
But that's just their credit, but you have a lot of other information on everybody besides just their credit information, do you not?
Yes, we do.
So and my understanding is that you get all this information free. You don't pay anybody for the information you gather on 145 million people, which is more than 1 out of 3 people in our entire country. It's
Largely free. There are exceptions, obviously, but this business, as you know, we're 118 years old. We're part of a federally regulated ecosystem that enables consumers to get access to credit. So that data is there, and it's used at their consent, by the way. Regardless of the type of data we have, if it's your employment data or your income data or your credit data, that data can only be accessed if you as a consumer give the consent for someone to access that.
How does one give consent
if
you're selling the information that you have on them?
So if you as a consumer go to your bank and want to get a credit card, for example, when you sign a contract with the bank for the credit card, you're allowing the bank the access to approve your credit, in this particular case, to give you the best rate and the best line.
The f***ing fine print. Now, I'm a weirdo. We all know this. And I do read the fine print from time to time, and so I've seen exactly what they're talking about. In most contracts that we sign for big corporate services, there's a line in there somewhere giving the business that we're choosing to do business with the permission to share information with businesses that they do business with. And that's the consent. Legally, we signed it. We checked the checkbox next to terms of service, and that's what they consider consent. The fine print. That's always where the devil lies. And so they have your information, even if you've done everything you can to avoid it. You know, I went to the Comedy Store and I podcasted with Jessica Rhodes and Margie Feldhu, and I found out that my friend Margie, she thought she was immune to this breach.
I don't use credit. I don't believe in credit, and everyone mocks me, and this is the only situation where I'm coming out on top.
And I truly wish that was true. But it's not, my dear friend, and my dear friends that are like Margie and of trying to protect yourself, because they have so much more on us than just what's on our credit reports. If you've signed any contracts with any companies at this point, because they won't tell us who they're working with, you just have to assume that you're caught in their web and that your information is with them now, and therefore out there now. And so what can you do to protect yourself? Well, first, like I said before, it's important that everybody regularly check your credit report. All 3 of them, one from each of the big 3 companies, Equifax, Experian, and TransUnion. And you can do that for free once a year at annualcreditreport.com. And when you look at your credit report, make sure that you recognize all the items on it. Are all of those credit cards yours? Did you take out all of those loans? Check the inquiry section. That's the section that tells you who has requested your credit report in the last few years. Do you remember doing business with those companies around that time? If you recognize all of it, you're good, at least for now. And so set a reminder on your calendar and check again this time next year and every year after that. However, if you see things that are on there that you didn't request, credit cards you didn't open, loans you didn't apply for, inquiries from businesses you've never stepped foot into, well, congratulations. Welcome to the Identity Theft Club, where the host is a bitch and leaving is a pain in the ass. And so, for fellow identity theft victims, here's Richard Gorse, the Chief Privacy Officer at Equifax, telling members of Congress what can be done when you discover identity theft.
There are a lot of different activities that a consumer can do to protect themselves if they feel they are victims or might be victims of identity theft. Certainly, one of the things that they can do is to place a fraud alert on their credit file. They can receive a free disclosure of the credit file to see if there has been any inappropriate activity or inquiry to their credit file. They can provide an identity theft report and identify the account information that they feel or that they say was opened fraudulently, and under the requirements of the FACT Act, the consumer reporting agencies are going to delete that information, and the consumer reporting agency that receives that identity theft with information removal request is going to refer it to the other 2 consumer reporting agencies who are also going to remove that information.
And like I alluded to before, I went through this under a year ago. So here's my experience. Maybe you can learn from it, but here's what went down for me last year. So first, the way my identity was stolen, I'm 90% sure it was because someone was stealing my mail. I realized my mail was being stolen in May of last year when a gift card disappeared. And it actually, I found out fairly recently that it was in fact stolen because there was a trial that took place. And after the trial was over, my state tax refund was sent to me by the attorneys. So my state tax refund was like in the court somewhere proving that these people were stealing mail. I didn't even know about it until the case was over. And then I got to deposit $62 out of nowhere. That was exciting. But yeah, someone was stealing mail. And eventually, about 6 months later, I got the mattress company credit card. And so that's when I went to annualcreditreport.com and I got one of my credit reports, and I realized immediately that this was not the only thing that was opened in my name. There were 3 different credit cards that were opened on the same day and a few more inquiries. And the thing is about inquiries, like even though some of those weren't successful as far as getting the credit cards, the inquiries go against your credit too. So I not only had to deal with the credit cards that were open, but I also had to deal with the inquiries. And so the first thing that I did is I called the companies that had opened the credit cards. There were 3 of them. And I told each one of them it wasn't me and asked them to close the accounts, and they all did. That was relatively easy. But then I had to deal with the fact that my credit report was wrong. So I went to identitytheft.gov. This is a website that's been set up by the Federal Trade Commission, and it gives really detailed instructions about what to do. And that was really helpful because, I mean, if this happens to you, they make it super easy to know what the next step is. So I really appreciated that. And what the next step was is I had to contact the 3 credit reporting agencies to get a fraud alert placed on my credit reports. I first tried to call TransUnion and they were useless, but I got a really friendly customer service agent at Equifax on the phone, and she walked me through the standard procedure for identity theft victims, which is to put a fraud alert on your credit report. Now, a fraud alert is a notice on your credit file that lets the banks know and the insurance companies and whoever else that they need to contact you and verify your identity before approving a new line of credit. Now, this is free for victims of identity theft, but you do have to submit the request in writing with proof of the identity theft. And the proof they want is a police report. So you also have to file that police report and make sure to get a paper copy of it. And then on top of that, they require a bunch of identifying information. So what they wanted, in addition to the police report, was they wanted all the information that I had about the fraudulent credit cards and applications that were on my credit report, but that weren't mine. I had to mail them like I said, the full copy of my police report, along with a handwritten and signed letter stating my name, including my maiden name, a copy of my social security card, a copy of my driver's license, a copy of my marriage license, and my addresses for the last 5 years. They also wanted a copy of a utility bill with my current address listed. And what makes me so mad about this is that this means that the hackers probably have all of that about me now because I had submitted this directly to Equifax. So not only do they have my social security number, but they have all of that other identifying information that I had to use to prove that I really am me. Equifax has that wrapped up in a tiny little file, and now that's out in the universe. So that makes me so mad. I'm actually one of the people most affected by this breach. But anyway, thanks to that 1970s law, Equifax, after getting my information, was required to share it with Experian and TransUnion, and that caused all 3 to put the 90-day fraud alert on my credit report. And so only having to submit all that crap to one of the companies and them being required to share it with the other 2, that really did save me a ton of time. And then about a week later, I started getting letters from all 3 agencies confirming that a fraud alert had been placed on my credit report for 90 days. So that's what happens after you know that your identity has been stolen. But at this point, that's not too helpful for most of us, including myself, now that those 90 days were over months ago. What we need to know now is how to stop identity theft in the first place, because we know that our social security numbers and matching identification is out there somewhere in the hacker universe. And so to prevent that information from being used to impersonate us, we now have 2 choices. The more extreme of the 2 choices is a credit freeze, and that stops the banks from looking at or accessing your credit file entirely. Now, this is the option that if you're like Margie and you don't want to participate in the credit system, this might be worth it for you. But depending on the state that you live in, the credit reporting companies are often allowed to charge you to put the freeze on your credit and to take it off. So that's just one example of how Equifax is being allowed to profit from their mistake. The less extreme option is to put a credit lock on your credit. And this blocks access to your file like a freeze, but it's easier to lock and unlock. Now, here's the rub with this one. Up until now, and things are changing specifically because of the Equifax breach, but in order to lock and unlock your file, you have to pay a monthly fee for the service at that company. So for me, after I had my identity stolen, I'm a customer now of Experian. I pay $15 a month for me and $15 a month for Joe, so that anytime something happens on my credit, I get notified. So if the score goes up or down or there's something new, whatever, I get an email. And I'm also able to lock my credit through their website, but only for that one company. I can't do it with Equifax or TransUnion unless I want to fork over $15 a month to them too. So, and so like I said, that's how it worked before, but things are changing. And so Equifax in particular, in response to their breach, they're now inventing a new way to lock credit. So here's their ex-CEO, Richard Smith.
Now, last week, the interim CEO announced that by January 31st of 2018, Equifax would make locking and unlocking of a person's Equifax credit report free forever. A credit report lock is already included in Trusted ID Premier and other services like credit monitoring and identity theft insurance. Will that still end after 1 year?
Congressman, a couple of differences. Number one, the product we offer today for consumers protects the consumer at the same level of protection they'd get January 31st. The difference is today is a browser-enabled product or service. The 31st of January, it'll be a application, much simpler and easier for the consumer to use. The protection is largely the same. So they get this free service when they sign up for 1 year. At the end of the 1 year, effective January 31st of 2018, it goes into the new lock product.
I guess, the difference other than not expiring between the credit report lock that is part of Trusted ID Premier and the credit locking tool that will be available in January, why not just extend the freeze program?
There's a difference between the freeze product, which came to pass with FACTA back in 2003, passed into law in 2004. That is now governed by state laws in all states, and it's a cumbersome process for a consumer. In many cases, some states require you to mail in your request for a freeze, and then we must mail you a PIN. So your ability to get access to credit when you want credit is encumbered. A consumer could go to a car dealer or to a bank to get a credit card, forget his or her PIN on a freeze product, have to go back home, look for the PIN, mail the PIN in. So it's a cumbersome process. The lock product we're offering today is a big step forward. The lock product for the 31st of January is an even further step forward.
So that's something. But again, like I said, in my experience, when I wanted to lock my credit, I'm able to do it with only the company that I'm paying. Is that going to change now? Well, that was a question that was asked by Representative Ben Lujan of New Mexico.
Will Equifax be willing to pay for this freeze at Experian and TransUnion for consumers whose information was stolen?
You're referring to the freeze or the lock?
You said they're the same, so...
Yeah, right now we offer a free lock product, as you know, for 1 year, and then a free lifetime lock product for life starting January 31st, 2018.
And that also extends to Experian and TransUnion?
No, sir, it does not.
Let me repeat the question. Will Equifax be willing to pay for that freeze, for that lock, at Experian and TransUnion for consumers whose information was stolen through Equifax?
Congressman, the company has come out with what they feel is a comprehensive 5 different services today and a lifetime lock. I would encourage, to be clear, TransUnion and Experian to do the same. It's time we change the paradigm, give the power back to the consumer to control who accesses his or her credit data. It's the right thing.
I'm down to limited time, Mr. Smith. I apologize. I'll take that as a no, that Equifax will not pay for Experian and TransUnion consumers.
So Equifax is committing to make it easier to lock our files with them, but banks also do business with Experian and TransUnion, so it's pretty easy for identity thieves to just bank shop until they get one that does business with one of the other 2 companies. It's just not good enough. And what's annoying is that Equifax seems to think it is good enough. Here's Senator Ben Sasse of Nebraska questioning Richard Smith.
Your organization has committed to providing identity monitoring services for the next year. But I'm curious about whether or not Equifax and your board have deliberated. Do you think your responsibility ends in 1 year, in 2 years, in 5 years, in 10 years? And if you think it ends at some point, if you try to think about the goodwill and balance sheet impact of all this, how can you explain to an American whose identity might be stolen later because of this breach why your responsibility would ever end? Does it end?
I understand the question, and it extends well beyond a year, Senator. The first step we took was the 5 services we mentioned to the chairman a minute ago, which gets the consumer through 1 year. The ultimate control for security for a consumer is going to the lifetime lock, the ability for a consumer to lock down his or her file, determine who they want to have access for life.
But isn't this, just to interrupt, isn't that about people who might be breached in the future? I'm talking about the 145 million whose data has already been stolen. Does your responsibility end, or what do you think your legal obligations are to them?
I think the combination of the 5 services we're offering combined with the lifetime lock is a good combination of services.
I actually think the innovation of some of the stuff you proposed for the big 3 going forward is quite interesting. But why does any of that 5 really do much for the data that's already been stolen?
Senator, again, the combination of the 5 offerings today plus the lifetime lock we think is the best offering for the consumer.
Okay, I don't think you really answered the question about whether or not your exposure legally ends for the 145 million.
I actually think we got our answer. Equifax doesn't think it has any legal responsibility to us. We get 1 year of their services for free, yay! And we peasants are supposed to be grateful. These crumbs are enough. Here's Senator John Tester of Montana.
These are people that didn't ask for your service. You gathered it. And now it's totally breached. And then, as Senator Sasse said, what's the length of exposure here? And you said, well, we're doing these 5 things. That's proactive. And I think we can all applaud those efforts. But I've got to tell you, that doesn't do a damn thing for the people who've had their identity stolen and their credit rating stolen. So let me ask you this. So their credit rate goes up a little bit, and they go buy a house for $250,000 on a 30-year note, and it costs them $25,000. Are you liable for that?
Senator, I understand your anger and your frustration. We've apologized for the breach. We've done everything in our power to make it right for the consumer, and we think these services we're offering is a right first step.
So clearly, Equifax doesn't believe that they have any legal liability for what happened, and it's probably because they don't have any real legal liability for what happened. There's no way that we can really punish them with the laws we have now. And even Republican congressmen are at least saying that they recognize that we have a problem here. Here's Representative Joe Barton of Texas.
Mr. Smith, what's the market value of Equifax? What's your company worth, or your former?
Yeah, Congressman, last time I checked, it's somewhere close to $13 billion.
$13 billion. I'm told by my staff that this latest data breach was about 143 million people. Is that right?
We were informed yesterday from the company that is typical in a forensic audit. There was some slight movement, and the number is adjusted. Press release came out from the company last night. It's 145.5.
Well, okay. I appreciate your accuracy there, but under current law, you're basically required to alert each of those that their account has been hacked, but there's really no penalty unless there is some sort of a lawsuit filed and the Federal Trade Commission or a state attorney general files a class action lawsuit against your company. So you're really only notified, you're just required to notify everybody and say, so sorry, so sad. I understand that your company has to stay in business, has to make money, but it would seem to me that you might pay a little bit more attention to security if you had to pay everybody whose account got hacked a couple of $1,000 or something. What would the industry reaction be to that if we passed a law that did that?
Congressman, I understand your question. I think the path that we were on when I was there and the company's continued is the right path. And that's the path of allowing the consumers to control the power of who and when accesses the credit file going forward.
The consumer can't control the security of your system.
That is true, sir. But
And
they can control
your
it.
security people knew there was a problem, and according to staff briefings that I've been a part of, they didn't act in a very expeditious fashion until the system had already been hacked. And I mean, you're to be commended for being here. I don't think we subpoenaed you. I think you appeared voluntarily, which shows a commendable amount of integrity on your part. But I'm tired of almost every month there's another security breach, and it's okay. We have to alert you. I checked my file to see if I was one of the ones that got breached, and apparently I wasn't. I don't know how I escaped, but I didn't get breached. But my staff person did, and we looked at her reports last night, and the amount of information that's collected is way beyond what you need to determine if she's for a consumer loan. Her entire adult history, going back 10 years, everywhere she's lived, her name, her date of birth, her social security number, her phone numbers, her addresses, her credit card, student loans, security clearance applications for federal employment, car insurance, even employment history of jobs that she worked when she was in high school. That's not needed to determine whether she's worthy of getting a $5,000 credit card loan or something. And now it's all out in the netherworld of whoever hacked it. I can't speak for anybody but myself, but I think it's time at the federal level to put some teeth into this and some sort of a per account payment. And again, I don't want to drive credit bureaus out of business and all of that, but we could have this hearing every year from now on if we don't do something to change the current system.
So there's really no teeth to current federal laws, and even the Republicans know it. And Equifax thinks that their new locking feature is all they're obligated to do. But will there be strings attached for those of us that use it? Here's Representative Frank Pallone of New Jersey.
All right, now I want to turn to what Equifax is offering consumers in the wake of this breach, specifically the free credit lock service that is supposed to be introduced next year. We've been told that this free credit lock service could require consumers to consent to Equifax sharing or selling the information it collects from the service to third parties with whom the individual already has a business relationship for marketing or other purposes. Is that true?
This product will be a web-enabled, mobile-enabled application that will allow a consumer, at the time he or she, if they decide they want access to credit, can simply toggle on, toggle off that application to give the bank, the credit card issuer, the auto lender access to their credit file to approve their loan.
Well, by agreeing to use the Equifax's lock service, will consumers also be opting into any additional marketing arrangements, either via Equifax or any of its partners?
Congressman, we're trying to change the paradigm. And what I mean by that is this will be in an environment viewed as a service, a utility, not a product. There'll be no cross-selling, upselling, or any products available to the consumer. When they go to get and sign up for the lock product, it's a service to them, and that's the only service they'll be able to get.
Now, will Equifax give consumers an easy and free method to choose not to share their data in this way, even if the consumer already has a business relationship with the third party?
Yeah, Congressman, I'd envision as this evolves over time, the consumer will have the ability to invite into their world who they want to have access and who they do not. It'll be their choice, their power, not ours to make that decision.
But that's a total question dodge. The question was that if we sign up to use their magic locking function, does that give Equifax permission to sell our information to companies? Because remember, credit reporting companies have more on us than just our credit report information. Locking our credit reports doesn't stop them from selling the behavioral or location or whatever other information they've collected from whatever sources they're getting it from. We aren't allowed to know their information sources for that non-credit information, and they won't tell us who their customers are.
Yeah, I can't tell you who our clients are. That's a proprietary list of ours. It's like our secret ingredient.
This whole thing feels so wrong, even to members of Congress. Here's Senator John Kennedy of Louisiana.
It just seems incongruent to me that you have my information, you don't pay me for it, you don't have my permission, you make money collecting that information, selling it to businesses, and I think you do a service there, don't misunderstand me. And you also come to me, you can't run your business without me, my data is the product that you sell, and you also offer me a premium service to make sure that the data you're collecting about me is accurate. I mean, I don't pay extra in a restaurant to prevent the waiter from spitting in my food. You understand my concern?
I understand your point, I believe, but another way to think about that is the monitoring product that you're referring to, Senator, in the future is far less required if you, as a consumer, have the ability to freeze or lock, as we call it, and unlock your file. And that is free for life.
But it's not just the freeze part. What if you have bad information about me? Have you ever, has an agency ever had bad information about you and you had to go through the process of correcting it?
Yes, Senator. There's a process that
it's a pain in the elbow, isn't it? I mean, the burden is kind of on you. You have my data, which you haven't paid me for. You're earning a good living, which I don't deny you. I believe in free enterprise. I think this is a very clever business model you've come up with. But you're earning your money by selling my data, which you get from me and don't pay me for, to other people. But if the data is wrong that you have about me, I would think you would want to make it as easy as possible to correct it, not as hard as possible.
And big picture, until Congress does something about it, we seem to be stuck in this system. Here's Representative Jan Schakowsky of Illinois.
What if I want to opt out of Equifax? I don't want you to have my information anymore. I want to be in control of my information. I never opted in. I never said it was okay to have all my information. And now I want out. I want to lock out Equifax. Can I do that?
Congresswoman, that requires a much broader discussion around the role of the credit reporting agencies, because that data, as you know today, doesn't come from the consumer. It comes from the furnishers, and the furnishers provide that data to the entire industry.
No, I understand that, and that's exactly where we need to go, to a much larger discussion, because most Americans really don't know how much information, what it is, that you have it, and they never said okay.
It's so frustrating because the operating theory in Congress and in much of the country right now is that the market should be free. And the thing that polices the market in this theory is the customer. If we don't like how a company operates, then we can and should take our business elsewhere, and that will teach that company a lesson. But that's not possible here unless you're willing to live completely off the grid and purchase no services from any company with fine print. It's not realistic. This is another example of the free market theory falling apart in practice. Because how do you stop doing business with Equifax? Even when you think you're not doing business with Equifax, you're doing business with Equifax. So how does the power of the consumer in the marketplace punish this company? And to make matters worse with this particular brand of free enterprise, their business model allows them to profit enormously from the mistakes that the market, in theory, should punish. Here's a long exchange between Senator Elizabeth Warren of Massachusetts and ex-CEO of Equifax, Richard Smith.
In August, just a couple of weeks before you disclosed this massive hack, you said, and I want to quote you here, fraud is a huge opportunity for us. It is a massive, growing business for us. Now, Mr. Smith, now that information for about 145 million Americans has been stolen, is fraud more likely now than before that hack?
Yes, Senator, it is.
Yeah. So the breach of your system has actually created more business opportunities for you. For example, millions of people have signed up for the credit monitoring service that you announced after the breach. Equifax is offering 1 year of free credit monitoring. But consumers who want to continue that protection after the first year will have to pay for it, won't they, Mr. Smith?
Senator, the best thing a consumer can do is get the lifetime lock.
I'm asking you the question. You're offering free credit monitoring, which you say is worth something, and you're offering it for only 1 year. If consumers want it for more than 1 year, they have to pay for it. Is that right?
Yes, Senator. But the best thing a consumer can do is a locked product.
Okay, but they're going to have to pay after 1 year if they want your credit monitoring, and that could be a lot of money. So far, 7.5 million people have signed up for free credit monitoring through Equifax since the breach. If just 1 million of them buy just one more year of monitoring through Equifax at the standard rate of $17 a month, that's more than $200 million in revenue for Equifax because of this breach. But there's more. LifeLock, another company that sells credit monitoring, has now seen a tenfold increase in enrollment since Equifax announced the breach. According to filings with the SEC, LifeLock purchases credit monitoring services from Equifax. And that means someone buys credit monitoring through LifeLock. LifeLock turns around and passes some of that revenue directly along to Equifax. Is that right, Mr. Smith?
That is correct.
That's correct. Okay, the second Equifax announced this massive data breach, Equifax has been making money off consumers who purchase their credit monitoring through LifeLock. Now, Equifax also sells products to businesses and government agencies to help them stop fraud by potential identity thieves. Is that right, Mr. Smith?
Yes, Senator, there's one clarification. You'd mentioned the LifeLock relationship, which was accurate. At the same time, the majority of that revenue we normally generate is direct to consumer. We've shut that down. We're no longer selling consumer product directly.
I'm sorry. My question is, every time somebody buys through LifeLock and they've seen a tenfold increase since the breach, you make a little more money. We actually called the LifeLock people to find this out. So I asked you the question, but I already know the answer. It's true. You're making money off this. So let me go to the third one. Equifax sells products to businesses and government agencies to help them stop fraud by potential identity thieves, right?
To the government, yes, not to the business.
You don't sell to businesses?
We sell business, but it's not to prevent fraud. That's not the primary focus or business.
But just to stop identity theft? You don't have any products that you're touting for identity theft purposes?
Senator, all I'm saying is the vast majority of what we do for businesses is not fraud.
So, look, you've got three different ways that Equifax is making money, millions of dollars, off its own screw-up. And meanwhile, the potential costs to Equifax are shockingly low. Consumers can sue, but it turns out that the average recovery for data breaches is less than $2 per consumer. And Equifax has insurance that could cover some big chunk of any potential payment to consumers. So I want to look at the big picture here. From 2013 until today, Equifax has disclosed at least 4 separate hacks in which it compromised sensitive personal data. In those 4 years, has Equifax's profit gone up? Mr. Smith?
Yes, Senator.
Yes, it has gone up, right? In fact, it's gone up by more than 80% over that time. You know, here's how I see this, Mr. Chairman. Equifax did a terrible job of protecting our data because they didn't have a reason to care to protect our data. The incentives in this industry are completely out of whack. Because of this breach, consumers will spend the rest of their lives worrying about identity theft. Small banks and credit unions will have to pay to issue new credit cards. Businesses will lose money to thieves, but Equifax will be just fine. Heck, it could actually come out ahead. Consumers are trapped. There's no competition, nowhere else for them to go. If we think Equifax does a lousy job protecting our data, we can't take our data to someone else. Equifax and this whole industry should be completely transformed. Consumers, not you, consumers should decide who gets access to their own data. And when companies like Equifax mess up, senior executives like you should be held personally accountable, and the company should pay mandatory and severe financial penalties for every consumer record that's stolen. Mr. Chairman, we've got to change this industry before more people are injured.
I agree. But that will take regulations. That dirty word that we're all supposed to fear and fight against. Unfortunately, regulations are the only things that can hold the credit reporting companies accountable. But in the meantime, while we're still allowing this Congress to push for freedom for the market, no matter how many people are hurt by it, what are the solutions to this being given to Congress by the self-regulating credit reporting executives? Well, here's Richard Smith.
If there's one thing I'd love to see this country think about is the concept of a Social Security number in this environment being private and secure. I think it's time as a country to think beyond that. What is a better way to identify consumers in our country in a very secure way? I think that way is something different than an SSN, a date of birth, and a name.
Did you also have the letters DNA flash before your eyes when he said this? Or do I just have the Rapid DNA Act on the brain? Because what's left? We know from the Rapid DNA Act episode that the trend in this Congress is to let law enforcement collect DNA from more and more people, many of them innocent. How long is it going to be before we all have to give up our DNA for identification? In the name of security, of course. And it's this same Congress that's loosening the standards for our DNA privacy. It's this same group of lawmakers that's responsible for creating laws to govern Equifax, Experian, and TransUnion in the wake of the breach. Because clearly, our current laws are not enough to incentivize them to protect our information. There needs to be punishments for this type of Losing the Social Security numbers of over half of all American adults should cost them a lot of money. And it should not make them money. And the only card that we victims of their recklessness really have to play without congressional action is a giant class action lawsuit. Because if all 145.5 million of us were to sue Equifax together, even if we were all only awarded $1, that's a real fine. And maybe then they'd give a shit about protecting all of the data they've collected. But it turns out that just like in the past when a credit reporting company caused public outrage, Congress did act at 9:45 p.m. on Tuesday night of this week, to be exact. And what they did has to do with class action lawsuits, the only card that we have to play to hold Equifax accountable ourselves. You see, one of the things that companies, including Equifax and all the banks they do business with, have been putting in their fine print are clauses that force us into a legal process that is outside our judicial system called arbitration. In arbitration, instead of suing the banks or the credit reporting companies in court, in the fine print, we are forced to instead meet in private with a representative from the company that f***ed us and a third person, often chosen by that company or bank, who hears both sides and makes a legally binding decision. That's arbitration. And Equifax is definitely not promising to stop putting this in their fine print. Here's Senator Richard Blumenthal of Connecticut.
Can you guarantee this committee that no consumer will ever be required to go to arbitration?
I cannot, sir.
Why?
Well, one, I'm no longer with the company. I can talk to the management team.
Well, that's what I mean by the designated fall guy. You know, you're here. You can't speak for the company. I'm interested in looking forward. How will consumers be protected? Will arbitration be required of them? Will they be compensated for the sense of security that has been lost? Will there be a compensation fund? Will there be insurance against that kind of loss? And I'm talking about a compensation fund that applies to them because of that loss of privacy. These kinds of questions, which you're unable to answer because you're no longer with the company, are as profound and important as any investigative effort looking back. And I recognize you're here without the authority to make these decisions, but I think someone from the company has to make them.
Well, no current employees of Equifax have followed up to promise to stop mandatory arbitration clauses. And by the way, the reason why Senator Blumenthal brought this up in the first place is because when Equifax rolled out that free year of credit locking thing, there was a forced arbitration clause in their fine print. Until, of course, a journalist noticed, wrote about it, caused another outrage, which caused Equifax to claim it was all just an innocent mistake and take it out. This is the type of company we're dealing with. There is no shame. But this arbitration thing is not a new issue, and it actually caused a lot of outrage during the height of the Wells Fargo scandals because the people who had had fake accounts open in their names or had auto insurance added without their consent to their loan policies, people who had their cars repossessed because of that, people who got royally screwed by Wells Fargo. Well, they found out the hard way that the fine print in the Wells Fargo documents they signed prohibited them from joining class action lawsuits. They'd have to sue Wells Fargo individually through arbitration. And so the Consumer Financial Protection Bureau, which is the only agency that exists purely to make sure that customers aren't getting screwed over by the financial industry, well, the CFPB recently finalized a rule that would have prevented the banks and the credit reporting companies from using their fine print to force us into arbitration and legally limit our ability to join class action lawsuits. The CFPB was essentially ensuring that we would have access to the courts, that we could file class action lawsuits in situations exactly like this Equifax breach. And so what did Congress do? Well, Congress, both the House and the Senate, passed a legally binding resolution to tear up that CFPB rule that said that the banks and credit reporting companies must allow their customers to have access to the courts. And even worse, Congress made sure that no rule like it is allowed to be created again. And why did they do it? Well, here's Senator Sherrod Brown of Ohio on the Senate floor right before the vote.
Studies show that Wall Street and other big companies win 93% of the time in arbitration. 93% of the time in arbitration, the companies win. No wonder they're fighting like hell. No wonder they've lobbied this place like we've never seen. No wonder every Wall Street firm is down here begging their senators to stand strong with Wall Street and defeat this, and pass this CRA, pass this rule to undo the rule stopping forced arbitration.
And in case you're wondering if this will actually stop class action lawsuits, here's Senator Mike Crapo of Idaho, one of the guys who wanted this and who voted for this, telling us the real issue.
The real issue is whether we will try to force the resolution of disputes in financial resolution into class action lawsuits. This is a question about whether we should force dispute resolution mechanisms into class actions. In fact, let me read the actual language of the rule that we are debating. It doesn't say anything about forced arbitration clauses. In fact, the rule doesn't stop arbitration clauses in contracts. It stops protections in arbitration clauses against class action litigation. So let's read what the actual rule says. The CFPB rule prohibits a company from relying in any way on a pre-dispute arbitration agreement with respect to any aspect of a class action that concerns any consumer financial product or service. In other words, the entire purpose of this rule is to promote class action litigation and stop arbitration resolution when there is a dispute.
And so they eliminated that CFPB rule, and with it, our right to participate in class action lawsuits. And they're not hiding it. They're proud of it. They're serving their corporate masters well. And this is not normal. In the past, every time, the pattern was that Congress reacted to scandals by the credit reporting companies with laws granting us additional rights. And that pattern was flipped on its head in the 115th Congress. This Congress reacted to the biggest credit reporting company scandal of them all by passing a law to protect Equifax from lawsuits. This Congress really is the worst. It's not just that we're paying attention now. Although, to be fair, it's not right to blame the institution of Congress, because we've seen Congress represent the people before, and it can be that way again. And it's not fair to blame all of the individuals in this Congress either, because a lot of them said no to this. In this case, it is fair to say that the Republican Party is protecting the banks and credit reporting companies, because every single person who voted yes in both the House and the Senate to give Equifax and the banks a get out of class action lawsuits free card was a Republican. Every single Democrat and independent voted no, along with only one Republican in the House, Walter Jones of North Carolina, and 2 Republican senators, Lindsey Graham of South Carolina and Joe Kennedy of Louisiana, the guy you heard not too long ago who described dealing with credit reporting companies as a pain in the elbow. And the Trump administration can be blamed for this too, because while this passed by a landslide in the House, in the Senate, the official vote ended in a 50-50 tie. So Vice President Pence broke it in the favor of the banks and Equifax. And so, as we go into the holiday season, as you have dinner with your parents or aunts and uncles or cousins or friends even who vote Republican because that's their team, perhaps tell them this story, because it's a simple one. Equifax, which has been collecting and spreading information about all of us for 200 years, lost that information, giving most of our social security numbers and names to match them to criminals. In response, the Republican Party, and only the Republican Party, eliminated our right to band together to sue them. This is a fact, and you can prove it using the links I've provided for you in this episode's show notes. And the end of this story is that Equifax got away with it. There's nothing we can do without Congress on our side. The only question left is if we're going to let the Republican Party get away with this too. Because Congress, which we keep allowing the Republican Party to control, Congress is our most powerful tool as citizens of this country, which is why business titans pay literally millions of dollars to control the people in it. If we want things to get better, Congress is how it's going to happen, just like it did in the 70s and even during the damn W. Bush years when corporate scandals led to laws with more consumer rights. On the federal level, controlling Congress is the best card. In fact, the only card we have to play. And the business titans have that card right now. You know, there's a major societal war being waged in this country. And I'm not talking about a gender war or a skin color war that we're encouraged by the TV to focus on every day. No, as long as we're fighting with each other about those things, we're on the sidelines of the war that unites damn near all of us. The war being waged by business titans to rig the laws so that they can never lose. And we are losing this war, and we will continue to lose until we decide to stop fighting over the uncontrollables, until we stop fighting over gender and skin, and start fighting the business titans who have Congress, our most powerful tool, in their money-stuffed pockets. Oh, this episode, man. You know, this is one of those that's been kind of keeping me up at night because when I started this, it was because I wanted to watch the Equifax hearings and see what was stolen by the hackers and what we could do about it. It was really quite simple. And I never expected this to become such a big picture deep dive. And really, I'm embarrassed that before this episode, I really just thought of credit reports as a fact of life. I never questioned them. And it's making me wonder how many other things am I oblivious to in my daily life? Because I've been doing this podcast now for 5 years, and this keeps happening. The more I find out, the more I realize that I don't know shit about how this world works and how we got to where we are now. Which is why I appreciate your support for this podcast so much. You know, it's amazing to be able to explore these questions and to be able to do it full time. You know, because I'm doing this full time, I was able to listen to 17 hours of hearings going back to 2008. You know, who has time for that shit? And I was also able to read about the history of credit reporting and look into the financials of how much these companies are spending to influence Congress. And as bad as things seem sometimes, even in this episode, we live in amazing times when someone like me, a curious waitress, can create an unfiltered, unedited show with no corporate overlords telling me what to say and be able to publish this show 100% independently to the entire world. I mean, doesn't that just give you so much hope? I mean, yeah, we're losing the economic war to the business titans. There's no way to deny that. They're brazenly creating and changing laws to ensure that the largest corporations in the world are accountable to no one. And it's not just here, it's global. The Trans-Pacific Partnership really opened my eyes to the world trade system and its profound anti-democratic existence during the last Congress. But what I'm learning through this podcast is that none of this is new. A small group of obscenely rich people trying to control the world, that's a story as old as human existence. And in our modern times, things that I thought started in the W. Bush years, I'm actually finding out that this goes back decades to when my parents were children. None of this is new. But you know what is new? This conversation. When my parents were children not that long ago, television barely existed. When you think about mass communication, there were 3 channels on TV, 4, and the radio? And the messages sent to the entire country were controlled by a very small number of people. But now, I can talk to you. And we may have met in person at some point, but chances are that we haven't. And yet here I am telling you stories. And I don't need permission from ABC or NBC or CBS. There's no boss telling me what story I have to tell next. Now, unlike any other time in human history, we can discuss what's happening in this country, in this whole world, with no filter. I mean, other than the fucking golf swings, of course, because China and India and other countries are not so cool with my colorful language. So I do have to kneel a bit to the iTunes gods. But content-wise, this is freedom, and we need to protect this. And to be honest with you, I'm concerned with what I'm witnessing in the podcasting industry. You know, this industry is being created right now, like on a national, international level. And it's modeling itself based on advertisements. You know, in the last episode, I told you about the whole stats debacle, how a company that I host the podcast with, they changed how they calculate stats and it hit this podcast numbers hard. So now I have no idea how many people listen to this podcast, and I guess I never did. And I'm still not upset with them for that. It's fine. But I can't seem to stop my mind from going back to why they did it. Because they did it to conform with the standards set by the Interactive Advertising Bureau. You know, as an industry, we're letting the advertisers, the corporations, determine how we count you and for what purpose. To sell you. You know, that's what the vast majority of people in my industry are aiming to do. So many people think that's their only choice, is to sell your time, to sell your attention to a company. You know, some dude on Twitter reached out to me, and I apologize for calling you some dude because I don't remember your name, but some dude reached out to me on Twitter, and I saw a quote in his profile, so I also don't know who originally said it, but it was something along the lines of, if you're not paying for the product, you are the product. Well, you are not my product. I have not and will not sell you to anyone. I'm not going to be a mini version of Equifax. You know, this podcast, the stories and the sources that I use to back it up in the very detailed show notes that I provide for each episode, you know, that's my product. And this particular episode, you know, I hope it was as valuable for you as it was for me, but this was life-changing for me because I'll never think about credit reports the same benign way again. And I'm going to be aware of arbitration clauses now. I'll always understand what they are when I see them from this point forward. I'm also going to change my behavior because of this episode because I'm going to check my credit from all 3 companies every year now. You know, when I heard about the Equifax breach just on the news or whatever, I knew it was serious, but I didn't understand exactly how much information they had to lose. And right now, I'm paying one company to monitor my credit. I'm paying $15 a month. But now I know that I need to lock my credit with all 3 companies separately, and I still don't know how to do that without paying each of them. And you bet your ass I'll be communicating with my representatives about this because that's a problem. But my eyes are open to this problem now. Are yours? If so, that's my product. That awareness, that story, that perspective, that's my product. Not you. I don't do this in order to make money selling your time. I produce this podcast for you. And the only way this works is if you pay for it. Because again, if you're not paying for the product, you are the product. So don't be a product. Let the podcast be the product and you pay for it, just like you would anything else that you get value from. The only difference here is that the payment is voluntary. I don't even set the amount. That's totally up to you based on the value you are receiving. You know, you get to tell me how much my product is worth. Are you going to tell me that it's worth 0? If you think this is worth more than 0, the best option for paying for this product, which has no middleman, is using checks. And you don't even have to use the checks that you pay for. You can use your bank's checks, and they will pay for the check, they will pay for the envelope, they will pay for the stamp. It's all kinds of fun. And you do this using your bank's online bill pay function. With your bank's online bill pay function, you can send either lump sums or set up recurring payments, subscriptions. And subscriptions are so helpful because those allow me to budget, which allows me to hire help, which gives me more time to research, which makes all these stories better. And so your payment also makes the product better. It really does. You can also set up online transfers. There's a thing called Zelle. There's Chase Quick Pay. There's a bunch of these things and send money right to the bank account, which is great. More and more people are choosing to do that. Also, if you want to use credit or debit cards, you can pay using PayPal, again in lump sums or in monthly subscriptions. And for those of you who want to pay per product, per episode, you can contribute using Patreon. All of these options are listed on the support page on congressionaldish.com, along with the P.O. Box address for those paper checks. However you choose to pay for this product, though, please know that you are appreciated and you're making a difference, not only to this podcast and to me, but you're making a difference in the big picture too. Because by voluntarily paying for a product that you could just take for free, you're sending the message that, first of all, you're not a product, but you're also proving that we don't have to let corporations dictate how we operate everything in this world. You know, when it comes to podcasting, we don't have to structure this amazing gift of an industry around them. And I really want to push that message to my colleagues, but I can only do that if you put your money where my mouth is. So yeah, please pay for Congressional Dish, and you can consider it one small step towards the decorporatization of the world. And now for my favorite part of the episode, where I get to hear from you and thank the people who are helping me fight the corporatocracy and who are paying for Congressional Dish. So let's start with our PayPal and paper check subscribers. First up, we got a raise from Andrew Galway. The raise. So this one got a little complicated, but this is a combo from Charles Priesta and his cousin Andrew Galway. So with them combined, we're getting $26.25 a month, and it is so appreciated. And here's the email from Charles. I always love his emails. He says, "My fellow garbage person, I loved hearing both halves of the main show in the most recent episode. Looking forward to more of the multi-party episodes, but hope that your deep dive content doesn't go away entirely. I'm one of those people who trust you more than any other media to be my intermediary between myself and Congress." Well, obviously, the deep dives are going nowhere because they're my favorite, but I had a month to do this episode, and I think that's why it turned out to be so much more than I expected, because I had more time to kind of digest the information and ask more questions. So yeah, I'm just going to do both as the opportunities arrive. And then as for the next conversational episode, I think I told you guys last time, but I have a great conversation about 3 bills with a comedian named Matt Maher. So that's what you're getting for Thanksgiving. So I think you guys will enjoy that one. But back to his note, he said, "Thank you for taking us on the winding ride through the tail end of the solo segment into the group comedy store segment. I've been contributing to Congressional Dish since your first appearance on the Higher Side Chats and will continue to do so until you tell me to stop. Podcast or not, I've gotten that much value." Oh, thank you. "Well, I've never been arms race material. I'm definitely a knight or possibly a baron by now in no agenda terms because I truly love what you provide. Even when unemployed, contributing Congressional Dish has always been a tier below food/shelter for my dog and I." Oh, that's incredible. And actually, I haven't talked about the arms race in a really long time because there's been no movement on it. And I need to do an overhaul. In fact, Charles knows this already. I've been emailing him about it. But the website, after it crashed, I had to take down just about all the widgets, and I've never really repaired it. So right now the website is super bare bones. So we'll fix that eventually. But it's funny that you bring up the arms race. I was just telling my sister that, no one talks about the arms race anymore. And then, ta-da! But back to his note, he said, "I'm excited for you and your newfound love of doing the show on your original terms and will be upping my monthly from $17.89 to $25 to cover my badass cousin Andrew Galway and I. Please consider this a new subscriber on his account, as a subscription to Congressional Dish was always going to be a part of my birthday gift to him this year. His birthday is November 24th and mine is November 26th. Ooh, Thanksgiving babies. But what's the use in waiting?" I love that. "Love always from an anarcho-capitalist who truly appreciates the work you do and condense through the briefings you provide. Charles Jude Prestia. Sorry, I suck. I don't know how to say last names. This is becoming a thing now. I really like you people, but you have complicated last names. Can't you all be Clarkson Smiths?" But yes, thanks, Charles. Great to hear from you. And Andrew, welcome to the club. Let's see. We also got a raise from Adam Selby. Now, Adam used to be providing $8 an episode on Patreon, but he switched to a $20 bank transfer through, I honestly can't tell. But yeah, it's a bank transfer, which is great. Hey, Jen, I set up an automatic transfer through my bank for $20 per month instead of my previous Patreon subscription. I don't think I heard anything about if you were getting it. We are. So I just wanted to check and make sure it's not disappearing into the void. And I appreciate you guys checking with that because sometimes we don't get them. Like there's a guy who sent me like a super long, interesting email and I'll read it eventually, but we still haven't gotten his check. And so when you hear your notes read on the show, that's how you can know we got the check. So I don't read anything until we actually know that we got the payment. It's kind of like our way to make sure that the stuff is actually showing up. But yeah, back to his note, he said, I'm kind of pissed that you found out your stats were so useless before, but I'm glad you're going to continue with the show, even though that was a letdown because every episode continues to be great. You know, I was upset, but the thing about here's the thing about the stats. It's actually really freeing now that I have some separation from it because it means that the entire time I've had no idea how many people are listening to this show. I've had no clue. And I probably never will because I think I said this in the last episode, but if it's so easy to change that calculation and I know they're constantly tweaking it, like I can't trust this stuff. And I was never doing this to be famous or I would like to change the world. I think I'm kind of coming to terms with the fact that this probably isn't going to happen. You know, small steps, I guess. But really, when I started this, it was because I had stories that I was telling to my husband and no one else. And I wanted to put them out there in the world, even if no one was listening. I just wanted to tell these stories. And so it doesn't matter how many people are listening. I mean, it does, but in grand scheme of things, like if you're listening, you're listening. It doesn't matter if it gets counted. You know what I mean? So I'm feeling much better about it. I'm not upset about it anymore. And really, I've just learned that stats don't matter. What matters are the emails from you guys where I learned that this made a difference in your life somehow. And when I find out through your contributions that you're getting value from it, I mean, that's what matters. And the number of people that are reaching, it doesn't. It really doesn't. So, I mean, it does just in that if there's something we need to act on. That's the one thing, aside from my ego, obviously. One of the reasons I would like to have a bigger audience is just because I would like to have the power to be able to tell you guys that something is happening that's getting no coverage at all on the television and get some messages sent to Congress to at least let them know, like, hey, we're watching you, dickheads. Like, that's the only thing when I think about having a smaller audience that makes me go like, that sucks. But my audience is still great. You know, it's still in the top, I think 5% of all podcasts in the world. I mean, it took a hit, but not a devastating one. And again, because I'm not kissing advertiser ass and doing the CPM model where I get paid per 1,000 listeners, financially, this didn't affect me. So it was an ego hit. That's it. Like, as far as real consequences for me, now there are other podcasters that are learning a lesson right now. They're learning the downsides of the advertising model, but I'm not one of them. And so if anything, it's making me like really excited to know that this funding model, it is protecting my independence in the way that I always thought it would, in a way that I was told I was kind of paranoid when I first decided to do this. But I wasn't paranoid because I'm changing nothing. I mean, I'm having more fun with it. That needed to happen because I wasn't enjoying the podcast for a while. But as far as like, oh, well, I need to attract more sponsors, like that's not a factor in my world at all. And I'm not doing any of the changes that I'm doing. It's because I want the podcast to be better and to be more entertaining and for me to enjoy it better. I mean, there is a selfish part of that too, but it has nothing to do with trying to get paid more. And I think that's just... yeah, I'm having a better perspective on the stats thing. You can tell by my rambling about it that I'm still like processing it, but yeah, it's fine. But moral of what I'm trying to say here is thank you, Adam. We also got another raise. This is a paper check from Amelia Jennings. She raised it from $10 to $15 a month, so thank you, Amelia. We are also now getting $15 a month from PayPal. This is life support. So thank you, life support. We also are getting $12.34 a month from William Miller of Fort Wayne, Indiana. Thank you, William. We're getting $5.35 a month from Kate Fielschlifter. We're going to go with Fielschlifter. I'm sorry, Kate. But Kate left a note. She said, hello, I'm a new listener and signed up recently to pledge $5.35 monthly via PayPal. It's not much, but I really appreciate what you're doing. Your show is a great help in keeping track of everything that's going on in Congress, and I hope you're able to continue doing it. Thank you, Kate. Thank you very much. And so far, so good. As long as I enjoy it, I can keep on doing it. And this episode, like I said, it was keeping me awake at night. It's made me question my own understanding of everything and just so much anger. I mean, you could tell in the episode that I got really, really mad about this. So I was also awake with just being like angry. But that said, I really enjoyed producing this episode because I feel like I learned so much. Like, it's just one of those eye-opening things that I never would have gotten had I not been producing this podcast. So this was one of those episodes where I feel like I got so much value out of it. And those really inspire me. I love it when it happens, especially when I don't see it coming. This was just going to be an episode about hearings, and it was so much more than that. So episodes like that, episodes like this, they keep me going. This one was really fun to produce, even though it was also an emotional roller coaster. But my whole life is an emotional roller coaster. But yeah, so that's it for new PayPal and paper check subscriptions. Now let's go on to Patreon. These are people that are contributing per episode. And we have a new Patreon subscription from Alistar Peters. So Alistar is contributing $3 per episode plus through an extra $50 one-time donation. And so here is the note. It says, hi, Jen. Alistar here, aka Amorphy. I just wanted to let you know that I've contributed $50 to your podcast. I know it's not much, but I'm thinking of doing the $5 Patreon, or would checks be better? Honestly, it's whatever's easiest for you guys. The only factor between the two is that checks, there's no commission taken out. So Patreon takes out about 10%, and then checks, there's nothing taken out. So that's the biggest difference. But if you like the idea of paying per episode, I really do think that's cool with Patreon, because if I decide to only do one episode 1 month, if I want to take a vacation, you don't have to pay me for that. Although I really do appreciate the paid vacations, even though this year, I've done 2 episodes per month except for July, and that's because my grandpa died. So as for like paid vacations, I don't really take them. But I do like that people, contribute monthly. But yeah, if you just want to pay for exactly what you receive, I think what Patreon offers is really cool. So really, it is up to you. This is why I have all these options. Back to her note, though, she said, I actually don't know if Alistar is a male or female name. I'm so binary. I guess it really doesn't matter, does it? But anyway, Z said, I took a few episodes off because I'm so podcasted out as I listen to a minimum of 5 podcasts a day. Wow, it's a lot. Too much to take in while working at my day job and branding my photo side career. Anyway, wanted to say bravo again on your details, follow-ups, enthusiasm, and bravery as you let us listeners know what's going on with our government. I love the DNA episode, which left me worried a bit, but here we are. I will continue to tell others about your show, and hopefully that translates into listeners that contribute. That is so important, and I always forget to say that, but it's so important that you guys tell your friends. It really is, because the only way this podcast is going to grow is if you guys do it, because I'm not going to spend a lot of time on marketing. And I know that's stupid. I actually got a text from a friend of mine. It was his birthday. So I'm like, happy birthday, Dale. And he wrote back and he was like, yeah, you did great on the Young Turks. Maybe next time you should tell somebody. I love this kid. He always calls me out on my bullshit. But he's right. I mean, I don't market myself. I don't market this podcast. I leave that up to the Congressional Dish marketing department, which is you. So I have one more ask for you. Please tell 3 friends about this podcast and share an episode with them. Share your favorite episode. Put it on their phone. Subscribe on their phone. Subscribe to the free Congressional Dish app. It doesn't matter if there's an iPhone or an Android. That's available to anybody. And you can put it right there on their phone. There's an app, and then maybe someday they'll pick up the phone and be like, what the hell is this? Click on it, and next thing you know, they're listening. But yes, please tell your friends and family about this podcast, because it's not going to get more listeners unless you do it, because I'm too busy watching 17 hours of hearings. Back to the note, said, sorry about not donating sooner, dealing with the IRS and state taxes. So, okay, so I think she meant to write, so pennies are fewer, but it came out, so penis are fewer, which I'm a 7-year-old, and that's making me giggle all over again. So I'm dealing with the IRS and penis are fewer. Oh, so cute. Anyway, I would like to ask of your professional input on a post someone sent me. It's a bit long, so no worries if it's not of interest or out of scope regarding your resources. Let's see. Here's what it says. Our present situation. Children of Congress members do not have to pay back their college student loans. I don't know if that's accurate. Next one. Staffers of Congress family members are also exempt from having to pay back student loans. This sounds like nonsense. Members of Congress can retire at full pay after only one term. I don't think so. Members of Congress have exempted themselves from many of the laws they have passed under which ordinary citizens must live. For example, they are exempt from any fear of prosecution for sexual harassment. Now, that's just not true. And as the latest example, they have exempted themselves from healthcare reform in all of its aspects. 100% false. That is a lie. What is this garbage? It goes on. We must not tolerate an elite class of such people elected as public servants and then putting themselves above the law. I mean, if any of this were true, that would be a fact, but this is not factual. I truly don't care if they are Democrat, Republican, Independent, or whatever. The self-serving must stop. Okay. Who doesn't agree with that? Governors of 35 states have filed suit against the federal government for imposing unlawful burdens upon their states. It only takes 38 of the 50 to convene a constitutional convention. Proposed 28th Amendment to the Constitution is, quote, Congress shall make no law that applies to the citizens of the United States that does not apply equally to the senators or representatives, and Congress shall make no law that applies to the senators and or representatives that does not apply equally to the citizens of the United States. Unquote. That is really stupid and unnecessary. I'm looking forward to, so that was the end of it. Based on how much bullshit was in there, I mean, I'm not going to research it just because the one that says they've exempted themselves from healthcare reform in all of its aspects. That's clearly a lie. So anything else that was said here, I don't trust it. So I don't know what kind of bullshit chain mail crap is being sent to you, but whoever sent this to you is sending you nonsense. And to amend the Constitution of the United States, that's a really big deal. If we're going to do that, how about we make bribery of representatives and senators illegal? Maybe doing something would be worth that time, and that's actually something that they're trying to do. Wolfpack. It's something that was started by the Young Turks. It's a really good idea. It's the constitutional convention type thing where the states make it illegal for corporations to basically legally bribe our representatives and senators, because that is the root of all of our problems. I don't care what issue it is. It's the fact that these people are paid off. That's why our laws are the way they are. So if we're going to convene a convention to change the Constitution, it sure as hell isn't going to be to fix an imaginary problem. Like, oh God, some of the stuff that gets sent around is just so dumb. Back to her note. Looking forward to more of your works and keep educating us. Thank you again for all your hard work, and hopefully one day if you're in New York City, I can say hi. Ciao, I'll start. I would love to say hi in New York City. Like I said, the dream for me is to do live events. And so, yeah. And obviously, if I'm going to do this, I'm totally coming to New York City. So eventually, my friend, we shall meet. But yeah, thanks for supporting me in the podcast. We also got a raise from $15 to $20 per episode from Michael Satumbaga. And his note says, Jen, I'm updating my pledge from 15 to 20 again because I'm really excited about the changes. Not that I'm bored with the old stuff, but I like that you have these new possibilities, so I'd like to support that. Also, you do a lot of great work, so please keep it up, and I really appreciate everything you do. Thank you. That makes me so happy. I'm so happy that you guys reacted positively to me saying that I want to branch this out more. I'm excited about it too. We also got a raise from 13 an episode to 16 from Z. So thank you, Z. And we got an immediate raise. So Carrie Navarez originally pledged $8.07 and then switched it to $10.70. And then so there's a note here, and the note says, okay, I thought I was being cool and failed. There are 535 members of Congress. And so she updated her pledge to $10.70 per episode after she realized that her math was wrong. And I find that so funny because I cannot do simple math. I have to do a calculator for everything. So that's totally something I would do. But yeah, thanks for supporting the podcast. I really appreciate it. And then, this is one of my favorite names, Radical Raccoon, gave us a raise from $5 to $6.50 an episode. And the note says, sorry to hear about the loss of non-existent subscribers. But it's not a loss, is it? Because they were never there. Here's a small bump in donation to help you stick with it. I appreciate the support, moral and financial. I'm doing much better with that now, clearly. We also are getting $5 an episode from Ron Bonney of St. Cloud, Florida. And he said, I just became a patron. Your story inspired me. I want to support you and your future efforts to your show. I laughed and cried for over an hour. You deserve the support. And I look forward to your Equifax episode. Your show is a lot of fun. I think it's fun too, even though it makes me mad and makes me yell. Thank you, Ron. We also are getting $5 an episode from Jonathan Oberg. Thank you, Jonathan. $5 from Allison Englehart. Thank you, Alice. And $5 an episode from Brian Williams. Thank you, Brian. And I think Brian discovered me on Instagram. That's right, guys. I'm on Instagram now, at Jen Briney. If you guys were following me on Instagram, can't see it now because it was in my story because I'm having a lot of fun with the whole my story thing. But I went for a run, which I don't generally do, but I do find that putting on loud music and going for a run when I'm feeling angry and just kind of pissed at the state of the world. Like I was just having one of those days while I was in the middle of researching this. And so I went for a run and I was down near the shopping center when I hit a tree root that had pushed the ground up, but it was dark, so I didn't see it. And I fully just like sprawled out on the ground. So I'm just laying there and some guy like comes in from the beach and he's like, hey, ma'am, are you okay? Because apparently he heard the moan. My music was up too loud. I didn't know that I made any noise, but apparently I did. And yeah, so I just like felt like such an ass. I looked down and my legs like, well, actually, I didn't know. I knew that my knee hurt. And so I looked up. I knew my knee hurt, but I was wearing long pants. And so I was like sitting on the ground. I was like, well, this sucks. And I looked up. And there, like a miracle in the desert, was Chipotle. So I was like, okay, I just fell on my face. I'm going to go and get myself Chipotle. And it wasn't until I was in the line that I realized my leg was bleeding. So on my story, I took a picture of my giant tomato face because one of the reasons I don't like to run or exercise in general is that what my face does to me is it turns bright red and my eyes turn bright green, which is the least attractive thing you can imagine. It's the ugliest look. And so I looked at myself in the phone at Chipotle and I was like, oh my God, I look like this in public. So I took a picture, put that on the internet. And then when I realized that my knee was cut, I made fun of myself for that too. But the Instagram thing, there's nothing political in there. If you just want to see lots of pictures of the dog or what I'm doing day to day, I'm really enjoying the My Story function. So again, follow me on Instagram at Jen Briney. I'm having a lot of fun with that. But I noticed that one of my new, do they call them followers? I don't know, was a B. Williams. So I think it was you, Brian. Let me know if it was. All right, so that's it for new subscribers who are allowing me to budget. Thank you all. Let's see, the last section we have left are the contributors. These are the lump sums. And we got a good one here from Anthony Andres, $200 from Iowa City, Iowa. And the note says, Dear Jen, thank you for the exceptional podcast. I've been a listener for a few months, and it's time for me to live up to my end of the value for value model. Congressional Dish fills an important role in today's media landscape. It's stunning that almost every other outlet has completely missed topics such as rapid DNA, FirstNet, and air traffic control privatization, just to name a few. I know, right? Luckily, we have your show to fill that void. I encourage your listeners who have not contributed to think hard about doing so. As someone who worked in non-commercial radio for years, I know how difficult it is to keep editorial control away from advertisers. Congressional Dish simply would not be the show we know and love after corporations get their hands on it, and it's our job to keep it that way. Amen. Included is my first and certainly not my last contribution to the show. Please keep up the great work, Tony. Thank you, Tony. I love absolutely every word of that message. Thank you very much. We also got $40 from William Phillips, who said, thanks for what you do. It's so important. You're very welcome. We got $24 from James and Zena. Is that how you pronounce that? James and Zena Hawkins of San Marcos, California. So thank you, James and Zena. We also got an extra 20 from Brandon Schultz, who is now officially a friend of mine and the host of the Seahawkers podcast. And he said that this was for the poop joke in the last show. So apparently he appreciates that I'm a 7-year-old. But yeah, thanks, Brandon. We also got $20 from Jose Huerta, who has been a longtime supporter of the show. He's from Ontario, Oregon. And the note said, as always, thank you for your work. Hoping everything is going better than expected. And this one's not only from, so this card was from Jose and his dog. And I kept the picture of a dog. It's a beautiful dog and he has a ribbon on him. So I think he won some kind of prize. But yeah, I mean, you guys know I'm a dog lover, so thanks for including the picture of your furry friend. Yeah, that was super cool. We also got a $15 bonus from another subscriber, Daniel Lee Scott. So thank you, Daniel. And we got a $15 check from Rachel Stefasic of Santa Fe, New Mexico. Thank you, Rachel. And then my friend Brandon Ellsbury also contributed $15. Thanks, Brandon. Hope all is well. We got a $10 check from Amanda Nelson of Dayton, Ohio. Thank you, Amanda. We got a $10 check from Irvin Wells of Madison, Wisconsin, who said, thanks for your important work. Bonus. Thanks, Irvin. We got $10 from Gregory Filler, who said, in the morning, Jen. First, I'd like to thank you for all that you do to fill us in on the shit Congress is doing. Second, I'm glad to hear you have a renewed passion for the podcast, as I tried keeping up on hearings and almost pulled out all my hair with the garbage Congress does. I think what you do is beyond any value I could ever give, but I'm going to be sending what little value I can afford to send back as a student teacher. Hey, you're a teacher. I get it. That we should pay our teachers so much more than we do. Lastly, one of the things that was brought up about the disaster relief for all of the hurricanes was the inclusion of churches. I agree with some of what you ladies brought up, but there are many church organizations that do more than some of the large nonprofit organizations. For example, Lutheran Disaster Response is a church organization that gives 100% of the donation to relief, and this does not include paying for administration. Since it is a church, the people that do the work are either volunteers, so they don't draw pay, or they are paid by the churches they work for, either the Evangelical Lutheran Church of America or the Lutheran Church Missouri Synod. I would like to believe that this is the type of organization that would benefit from such a line item in legislation, but I have listened and have seen enough to agree with the assumption that it will be misused and abused by wealthy assholes. Thank you for that perspective. I want to be clean. This is not to ridicule or demean anything that you said. Didn't take it that way. I value and agree with nearly all you came to as conclusions about the relief. Just felt that I would be able to add some to the conversation, and you did, and I appreciate it. Thank you again for your hard work, and I look forward to more great Congressional Dish. Sir Gregory Filler, Baronet, KNA. Thank you very much. I love my No Agenda crossover listeners. You guys are seriously the best. And then last but certainly not least is Carl Bud Johnson, who contributed $5.24 from St. Petersburg, Florida. And this was for episode 158. He said, good job. Love you, Bud. Thank you. All right. So that's it for this week. Next episode is for our veterans. This is something that's been on my radar now for years. Basically, they're trying to privatize the Veterans Administration. And I'm going to tell you how they're doing it. So that's going to be for Veterans Day weekend. And then after that will be the Matt Maher episode that we recorded at the Comedy Store. So that's what you have coming up. On a personal level, I am going to a party on Saturday that I'm pretty excited about. It's going to be in the Hood in Oakland. And it's going to be a full-blown rager. My friends have a house in a place where it's like, as long as you're not killing people, like, anything goes. And they've invited 250 people, basically our entire kickball league, to a Halloween party. And even though I hate Halloween, I hate dressing up in costumes, I hate all of it, I'm doing this because outside of high school, when do you ever get to go to a rager anymore? So I'm going to go to like a legit rager at 35 years old. I mean, I really like my Peter Pan life. And then on actual Halloween, I'm going to see Kesha in concert. So I'm going to have some fun. And then, yeah, it's supposed to rain next weekend. So I'm going to sit on my ass, watch TV, binge watch some stuff. I would love to hear what you guys are binge watching. I'm doing Mr. Robot right now. I have The Americans on my list, and I have Downton Abbey. So I do have a few things to look forward to, but I'm always looking for other shows. I just did the first episode of Riverdale on Netflix, and that was really entertaining. It's a little like teen, like there's some immaturity about it, but I enjoyed every second of it, and so did my husband. So yeah, I like that one. Other than that, not much going on. So I think I'll wrap it up. I would like to thank Margie for recording with me at the Comedy Store. I know I poked a little fun at you in this episode, but I also know you can handle it. So I would like to thank Margie and Jessica again for being amazing agents at Interview Connections. They're doing a great job introducing me to people. I'd also like to thank Brian, who owns Only Child Imaginations and who does all the artwork for each of these episodes, because I don't have that kind of artistic ability. That's all Brian. I'd also like to thank the entire team at Pro Podcast Solutions for their audio editing. I'd like to thank Jess Hershey, jesshershey.com. She is the one that does the show notes, and she does a great job. And I'd also like to thank my sister Lauren and my dad, who take care of all the business side for me because I am a 7-year-old, and so my family needs to take care of me. No, but seriously, they've been working their asses off for me, and I appreciate it. So you guys are the best. And last but not least, I'd like to thank you for listening to this podcast, for sharing it with your friends, and paying for it so that it can continue to exist. Until next time, I will talk to you later. Take care, be safe on Halloween, and fuck candy corn. Bye-bye.
We're surrounded now by liars coming at us through our TV screens.
We don't have a domestic spying program.
They're content to fight in black and white despite the many in-betweens. We got a president who plays with the facts. And then he waves a flag to cover his tracks. As if the lie is alright, if the end will justify the means. Now we are so damn tired of being lied to.
The polar ice caps aren't going away.
We don't think we can deny it anymore. You can stick to your story if you think it flies. But we're not keeping quiet anymore. We are so damn tired of being lied to.
Government jobs consume the profits of the private sector.
We don't think we can deny it anymore. You can stick to your story if you think it flies. But we're not keeping quiet.